Hi guys, I'm Karunya Rao, and in Ideas for Profit, we talk about a leading player in the Indian media space, SHEMAROO Entertainment, which has more than 4,000 titles in Hindi and in regional languages. It has strong presence in traditional and digital media, where it generates revenue through different sources: content indication, home entertainment, in-flight entertainment, preloaded devices, YouTube and OTT, and telco partnership. Before the pandemic, 50 to 60% of SHEMAROO'S revenue came from traditional media and the rest from digital. Now, digital media revenue has grown at a CAGR of 40% between FY15 to 20, and around 15% of digital revenue comes from 45 YouTube channels with about 100 million daily views. Another 40% comes from other mediums, which include the company's OTT offering, SHEMAROO Me, OTT syndication, and the remaining 10% from telco affiliations, which is a declining category. Traditional media segment revenue has grown at a CAGR of 2% over FY15 to 20. The majority of traditional media revenue comes from content syndication and may see good traction from the company's two free-to-air channels, SHEMAROO TV and Marathi movie channel, SHEMAROO Marathi Bana, in the coming years. SHEMAROO follows a differentiated movie rights acquisition strategy under which it participates only in second and subsequent cycles for film monetization. The first cycle of a movie includes theatrical, TV, and overseas releases, after which the second cycle commences, which has lesser risk due to better visibility and availability of performance data, thereby helping take advantage of increasing ad spends, digitization, and so on. This enables SHEMAROO to achieve its desired IRR at the portfolio level. The Indian media industry was worth $25 billion in 2019. It fell 24% in 2020 to $18 billion due to the pandemic. Of this, the TV segment accounts for 50%, followed by digital media 17%, print media accounting for about 14%, among other categories. SHEMAROO'S net sales fell 3.7% sequentially to 75 crores, while EBITDA was down 35.7% to 7 crores in Q1 FY22 because of COVID impact. Margins stood at 9.6% after slipping for 76 basis points over Q4 FY21. Depreciation remained unchanged during the quarter, while interest costs came in marginally lower, which led to a loss of close to 1.5 crores. Now, segment-wise, digital businesses continue to compensate for the poor performance of traditional media. Digital media segment revenue grew 9% QOQ to 40 crores. Traditional media segment revenue fell by 15% over Q4 FY21 to 34.5 crores, following a broader trend across media businesses due to weak ad spends. SHEMAROO has one of the largest video content libraries in India and monetizes it on multiple platforms. It entered TV broadcasting in 2019-2020, which provides depth to the company's offerings and a platform for its content, thereby generating revenue without additional costs. SHEMAROO had a debt of 262 crores in FY21, of which around 6 crores is due for maturity this year, and it should be able to meet it through internal accruals. Media businesses tend to be working capital intensive and depend heavily on ad spends. FY20 onward, the company faced headwinds due to poor ad spending and COVID-led lockdowns. Investment in new initiatives put further pressure on the financials of the company. Now, despite a challenging year for the media sector, SHEMAROO generated positive free cash flow and managed to offset broadcast and syndication business performance with the digital media vertical. We expect SHEMAROO'S share of revenue to remain almost equally divided between traditional and digital media over the next few years, with rising broadcasting revenue and decline in telco segment. We expect digital media revenue to grow at a CAGR of 30% over the next 2-3 years, driven by a 22% growth in the digital media sector in the same period. We see traditional revenue grow in the range of 25 to 30% over the next 2 years on a low base, and to be broadly driven by the rise in TV subscriptions, which are likely to increase 6% every year between 2020 and 2025, reaching 231 million from 176 million in 2020. At a group level, we estimate revenue growth of 28% in the next 2 years. At the current market price, SHEMAROO trades at a PE of 8.8x, which is at a discount to its long-term multiples due to weak financial performance. Therefore, we believe the upcoming festive season and pickup in vaccination should improve ad spends and consequently help with the earnings, improve the earnings from Q2 FY22 onward, and gradually shrink the working capital cycle. A possible risk to watch out for will be the COVID third wave. However, we recommend investors with a medium to long-term view to accumulate the stock.